Welcome back to Crypto IQ. Today we're going to be talking about where Ethereum might bottom and are we setting up for another drop and what the critical levels are. So if you're new to the channel, make sure to subscribe. And with that being said, let's dive in. We're going to start on the ETH chart here. And what I'm going to do is just kind of go over some technical analysis and some cycle history. So we're going to start with some TA. Now, if you'll remember, I've been looking at that $1,500 level. When we were kind of up here, that's where I pointed out we would probably break down to. And there's a video about that on my X, so go follow me on X. But we came down to that $1,500 level. And the thing to note here is going to be, it looks like we're having some bearish retest right now. And if we just kind of draw out this level right here, the $1,800 level, when I say bearish retest, we can see that this was support over here, support over here. We ended up breaking down below, came back up, bearish retest, and are getting rejected. So that's a bearish retest of this level where we got rejected and we're coming back down. I very much think we're going down to 1,500. 1,500 is probably going to be in the cards, in the next few weeks. And especially if the whole crypto market is seeing some struggle, so or some weakness. Now, if we kind of zoom out to the weekly here, where do I think the bottom's actually going to be? Because in trying to identify just support and resistance, that's how I view where bottoms might form. So I would say the next major area of support, if we end up breaking down below that $1,500 level, is going to be that $1,100 level. That's where I think Bitcoin could potentially bottom this cycle. I don't actually think we're coming back down to 800 or lower. I think that's a little too bearish. I think that's the equivalent of saying Bitcoin's going to go back to 15 or 16,000. To me, that's a little too bearish. There's too much going on with the network. There's too much demand for Ethereum that I really don't. Some catastrophic black swan event would have to take us down there. It's possible, but I don't think that's where we're going to end up bottoming. I think, what might end up happening is, we have this midpoint here where we kind of had some previous resistance kind of at that $1,400 level. If we end up coming to the 15 break through, maybe we go sideways and kind of that last capitulation is a wick down to 11, and that's kind of how the bear market ends up playing out. And so was this, let's see here, we ended up peaking in August, which was a little bit different than Bitcoin, which peaked in October. But nonetheless, I do think the majority of the bear market is over. So if we just kind of, and let me explain that so it's clear. So we're sitting at around a 65% drop from the all-time high. So in terms of a length of correction, it's been, we can measure that out, about 294 days. So we've been in a downtrend for 294 days, and we've corrected 65%. The majority of the bear market, I think, is over. What do I think we have left? Well, if we normally bottom, and we'll just kind of say Bitcoin peaked in October of 2025. So if we bottom in October of 2026, we'll just say Q4, we'll say, we'll just kind of mark that out right there. So if we say, okay, we're going to bottom at the 1100 in October of 2026, that's going to be a 126-day downtrend and a 32% drop. It's going to feel a lot worse than this has so far, especially if you have exposure to smaller cap altcoins. Now, so the majority of the bear market is over. The majority of the downtrend is over, but I think this last little bit, this last 100, maybe 200 days, and next we'll say 20 to 40% correction is going to be the worst. Now, and it's not going to be straight down either. I should probably clean that up a bit, but anyway, we get the point here. So looking at it from more of a cyclical approach, right? So we peaked in January of 2018. We ended up bottoming here in December of 2018. We peaked over here in November of 2021. We ended up bottoming kind of in June of 2022. So a little bit longer, I would say, or excuse me, a little bit shorter than a full year. Although Bitcoin, I think, took that full year in the previous bull market, where Bitcoin may have bottomed over here. So it very well be, or maybe it plays out like it did last cycle, but I think we haven't really seen that same sort of capitulation in ETH, and we do have a few different factors at play. So maybe it plays out like it did last cycle, where we kind of put in a maybe the low is actually in for Ethereum. That would be best case scenario, and in kind of in October, maybe we put in that higher low. That would be reminiscent of what happened last cycle. But I don't think that's the case, and here's why. So Cycle IQ is a data platform I developed, and if we go over here to sentiment and flows, we have the ETH ETF flows. Now we can see a clear outtrend or downtrend in flows, and we can see a price over here in October 10th, or not a price, a trend since October 10th of 2025, where we've just been in a downtrend. Now, there's good news and bad news about this. One, I think this previous bull market was like 100% institutional driven by the spot ETF products. But the downside of that is I think, okay, well, since the spot ETH ETF, we're seeing a lot of outflows, well, they're going to obviously weigh on the price. So that's kind of why I think, while this scenario could play out if the bottom is in June at the $1,500 level, I don't think it's likely that we play out like this, because we have all these institutions and we're seeing all these outflows. Now, believe it or not, institutions aren't any different than you or me. They just have a bunch more money, like billions of dollars. So it's not like they're better investors. They just have more capital. As we can see, we're seeing some outflows here, and we're still seeing outflows even after the price of Ethereum has corrected 65%. If institutions were much, had this crazy power of investing, we would probably see inflows right now. But institutions don't work like that. They're actually pretty bad investors. They just have more money. So we can see here that, I think the 65% drawdown we've seen, I think we have anywhere from 20 to 40% more, and maybe 100 to 200 days, which would be less than what we saw over here. So why am I worried about the spot ETF flows? Well, today was a holiday, believe it or not, in the US, a banking holiday. So if the S&P goes into a bear market, recession rolls over, and I think there's a case for that with the new Fed, because of the uncertainty that this is bringing. Markets don't like uncertainty. Additionally, apparently the geopolitical tensions between Iran and the US have not been resolved yet, and they, like, talks stopped or things escalated. So I mean, who knows anymore? Who knows about that? That just means more uncertainty. So the point being, there's still a lot of uncertainty in the market, and if that triggers a correction in the S&P, these institutional ETF Ethereum investors are going to sell, and it's going to, it's a clear outflow trend. They're going to sell, and I think that's going to weigh negatively on the Ethereum price. Now, I do want to talk a little bit about the ETH BTC chart, because this is interesting, and I think this broke. This overlaying Bitcoin, this broke, and here's why. So if we kind of overlay Bitcoin just to like highlight the point here, and we'll put this on a log scale. Or maybe linear was better. Linear or regular might be better. Yeah, let's do regular. Okay. And I have a reason as to why I think this fundamentally changed. But what's interesting to note that over here in 2020, the bottom of ETH BTC arrived shortly after the Bitcoin capitulation. So we were kind of up here during that capitulation, and then we kind of had that one more move down. And then we can clearly see that this move up, whoa, that was not straight. Just kind of mark it out. This move up was kind of that first peak, if you will. And then this peak over here kind of mapped to this second peak there. What's interesting about this is it's like the bottom over here, we were still really elevated. Like we hadn't, comparing it to the previous cycle, there was a clear breakdown from these highs to down here during the capitulation to one more step. So we kind of had 3 huge drops in the ETH BTC chart. One's the peak, one's the capitulation, and then ETH BTC bottomed. So that's kind of what happened in 2017 to 2018. In 2021 to 2022, I mean, the ETH BTC chart stayed elevated. This was the bottom. This was the bottom, which is quite different than what we saw over here. So we just kind of had one drop, from the top to the bottom. That was the correction. We continued to decline all the way up. Whoa. We continued to decline all the way up until the first, or I would say the second peak about in Bitcoin. So in January 2025, we continued to downtrend, and then the ETH BTC chart bottomed over here when we bottomed. And then we had this nice little rally, and that was the top. That was the top of the ETH BTC chart. So completely different than the previous cycle. We ended up just kind of declining into the majority of the bull run, came back, and that was the bottom down here. This correction was the bottom of the ETH BTC chart. And then we kind of had one more push up where we saw, which was equivalent to maybe half of this move. And so there's a few reasons for that. The other big thing is we didn't see the collapse of the Bitcoin dominance. The ETH BTC chart fundamentally changed. Why? And so I think there's 2 dynamics here at play. One is going to be the ETF products, the institutional ETF products that lock up both Bitcoin and Ethereum. So there's no rotation from those coins into other parts of the market. Those coins in the ETF products stay there. Now, I'm incredibly bullish on the spot ETF products, and I think Michael Saylor and Tom Lee of Fundstrat, and in 2 to 3 years' time, they're going to go down as like the greatest investors of all time. That's my call. What they're doing right now is just, it's so revolutionary, so ahead of their time that no one can wrap their head around it. And so I guess sidetrack there, but coming back to the spot Bitcoin ETFs, I'm incredibly bullish on these products and incredibly bullish on individuals, institutions, companies, countries that employ a similar strategy to what Michael Saylor and Tom Lee are doing. And so maybe if you're not aware, maybe I'll kind of break down what they're actually doing in a later video. But TLDR, they're basically leveraging up to buy as much of these digital assets as they can. And so those individuals and the spot products, think 10 years down the line, 20 years down the line, they're going to have so much more. But it's such a market dynamic change because we're used to having this capital be able to rotate freely into other assets. This previous cycle in 2025 was the first cycle where that fundamentally changed. And I think 2021 was the last time we saw that. was the last time we saw these assets being able to freely rotate into one another. Now, again, I think this is incredibly bullish for the market in that the majority of trading now happens on Bitcoin USD pairs and ETH USD pairs. And previously, and we'll also throw in altcoins here to talk about altcoins, but altcoins traded like exclusively on their Bitcoin and ETH pairs up until maybe 2021. After 2021, that materially changed. Most altcoins now just trade on their USD pair. Same for Bitcoin and Ethereum. Yeah, there is a market and an order book for Bitcoin on ETH, but there's just, it's such a drop in the bucket compared to the amount of volume that's coming across on the USD pairs, USDC, USDT, that I think the market has fundamentally changed. So we're not really ever going to see such a correlated orchestra where everything moves in tandem at one time. You have Bitcoin peaks, Bitcoin rolls into altcoins or to Ethereum, Ethereum peaks, Ethereum rolls into altcoins, altcoins peak. Like it used to be like an orchestra, but now the markets have fundamentally changed where everything trades on their USD pair. Everybody needs a market maker and deep order book liquidity. So things have fundamentally changed, and I think it's for the better. And that is why I think we go back to the Ethereum chart, wherever, there we go. That is why I think I'm not convinced we're going to see something similar over here play out. Mainly because there's just too much trading volume on USD pairs and not so much on ETH BTC, if that makes sense. So I very much think Ethereum is probably, it came back down to this level. And I think it will probably come back down to this level. And then it's going to trade. I think all risk assets are going to stay relatively correlated for the next, until we kind of go risk on with the markets. And we need to see a meaningful Fed pivot. So I think the big crypto assets are going to become more correlated to the S&P interest rates and what the Federal Reserve does as they exclusively trade on their USD pair. Now that's good because I think when they run, they're going to run. And I'm incredibly bullish on this next cycle because if we just kind of look at this chart, this previous cycle was mostly institutional driven. Looking back, we can say that this was the majority retail, obviously retail, institutions. I think the next cycle, which will take Ethereum closer to 10K, we're going to see both, and it'll probably start from $1,000. So I think Ethereum will kind of get close to that 10x, and it might even get more euphoric than that. I think we're going to see both institution and retail come in, and everything we're seeing right now with AI, SpaceX, not so much metals anymore, but 6 months ago metals, all those shiny new objects were going to rotate back into crypto kind of end of 2027, early 2028, and we're going to see the most euphoric bull run we've ever seen in crypto, I think. And I'm excited. Look, these last 6 months, if this plays out like I think it will, which will bottom in Q4 of the year of 2026, down close to $1,000, it's going to be terrible. But zoom out and let the market come to you. So I think we're going to wrap it up there. Thanks so much for watching, and I'll see you guys next time.